have been under constant pressure from the strong USD and ETF sell-off. How long do you see this trend continuing?
The downtrend that we see in the gold price is likely to continue at least over the next 6 months. There are several factors who speak in favor of a lower price. First of all, the dollar is strengthening. If you look at the tapering off of monetary policy, that's price supportive for the dollar and negative for real assets. Second, what you have, inflationary pressure has eased off quite a fair bit, and we don't see any inflation pressure in the near term. And the third one is about the risk assessment investors are taking. Risk aversion has come down quite a fair bit, and people are willing to take risk, and that's also negative for the yellow metal.
Where do you see gold prices in 1 year, 3 year, and 5 year time period?
Well, looking at the gold price, I would say in the short run, we're looking at 1,150 marginal production costs. That's quite feasible. Then 6 months, 1,250. And then I would say over 12 months, we are going to have a gold price above 1,500. There's still a lot of uncertainty how we're going to resolve some of the challenges in the developed world. Now, a gold price over 3 or 5 years, to be honest, very tough to judge, and I wouldn't give any comment on that.
How do you see gold's physical demand shaping up in Asia?
Well, physical demand after the sell-off in April has really soared rapidly, but at the same time, as time passed, we also have seen volumes normalizing, especially when some of, in India, when you look in terms of the changes in some of the import taxes, that has affected demand quite a fair bit. Volumes that we ship to Asia, especially to India, have dropped more than 50%. So demand is coming off, especially in the Indian case. In China, I would say generally things are pretty much stable. To really see here more demand coming in, I think we're going to need lower prices in the coming months.
And how do you see base metal prices faring with weak China data, despite optimistic US jobs and housing numbers?
Well, the weak Chinese number has a profound negative impact on some of the base metals. Base metals came off 3 to almost 5% in recent days. So the fact that China is decelerating beyond market expectation is not a good signal. Now, for the second half, we still expect some economic acceleration. I think that should allow here some of the base metals to recover. But their acceleration is getting less and less compared to our initial estimate. So while we were initially looking at least in terms of an increase between 10 and 15%, that increase is now being moderated. I would look at maximum 10%. I think important to recognize this as well. Yes, the US numbers have been better, but you also need to take into consideration that housing in the US does not need industrial metals. You might need a lot of wood, but you don't need steel. So considering that, the focus remains on China, and that remains a big question mark.